Managing Director with Hindalco Industries. Mr. Pai, good morning. Thank you for joining us. It's been a bumper quarter for Hindalco, and that's largely because of uptick in metal prices. So let's talk about what worked for you and what did not work for you.
Yeah, I think that, if you look at it, our consolidated EBITDA at about 8,048 crores and our consolidated PAT at 3,417, which was about 8.8 times higher than the same quarter last year. This has probably been the best quarter in the last 15 years for Hindalco. So overall, a great result, and happy to say that the international business, which was Novelis, the aluminium business in India, and the copper business, all three businesses contributed to these good results.
Now, higher copper prices and higher aluminum prices have really been the reason why profits have been strong. Do you think that non-ferrous metal prices will remain strong in the near term?
So look, I first wanted to sort of first clarify when you said that the results are largely because of the high prices. So I do want to put in that, yes, the prices help. But if you look at the Hindalco margins versus our competitors, our cost of production was much lower than them. So I think credit should be given to our people in operations for running a very efficient operation, and also our procurement and logistics people, because we could keep our input costs under control in Q2. So the fall through to the 42% margins of aluminium, yes, were due to the good LME prices, but also were due to a very efficient operations being run. Now, your question of, how will this sort of go forward? I think that, LME in the quarter two was at an average of 26.40 and currently is running at about 26.75. So the LME is sort of flattened out. It had spiked up to about 3,000 and has come down again. But I do believe that the LME tailwinds are still there. Supply and demand is quite tight. So you should see steady LME prices holding. It is true that cost inflation has started to come in. Our Q2 cost of production was 5% higher than Q1, and we expect Q3 to be 8% higher than Q2. So margins will get a bit compressed in Q3.
Sure. Mr. Pai, since you just touched upon cost of production, wanted to understand whether it's lower for India across the board, and does that in a sense give you a competitive advantage being an Indian player versus other global players?
Yeah, I agree with you. And I think that's largely because most of the aluminium producers in India are sort of fully integrated. So power is 40% of the cost. So coal and power prices in India are certainly helping us. But also for players like us, we are backward integrated as far as alumina goes because of the large bauxite reserves in the country, and with us having Utkal Alumina. So bauxite to alumina, our alumina costs are also a big advantage over international players.
Right. Mr. Pai, one final question before we let you go on your debt levels. Given your debt to EBITDA has come down significantly, is the debt reduction going to continue going forward as well?
Yeah, as you said, quite rightfully, in these sort of good macro times, the cash flows are good, and most of the companies tend to deliver. And if you remember, we had announced a deleveraging program in February of this year when we did our capital allocation framework presentation to the street. And we are following that. And if you look at our India net debt to EBITDA is at 1.25, and probably in the March quarter, it will be below 1. Now, our plan is that we have a 6,000 crore bond coming due in June of next year, and we intend to pay that down. So we will be significantly getting rid of a very high cost debt that we have on the India books.
Okay, Mr. Pai, we're going to leave it at that. Thanks so much for joining us. It's